It's great to be here. My name is Patrick. I'm the founder and CEO of Priori Data. I've been lucky enough to do the opening address for APS here in Berlin and also in New York over the past few years, and it's great to be here again. Thanks so much to James and Matthew and the rest of the team. We're going to start the morning off with some trends, some data. We'll try to walk you through some of the bigger things which are impacting the app stores today and how all of you can profit from that. And it'll be a really fast 15 minutes. Try to keep that energy up after the great intro. So let's see as we go through. For those of you who don't know me or us, we're a mobile app intelligence company. We try to bring transparency to the mobile market with data and technology. We think that's really important to make the market transparent, efficient, dynamic, and fair. And we sit at the center of the ecosystem. We monitor the performance of apps. We try to bring that out to you so that you can make more successful app businesses. And we leverage data from over 250,000 apps that are sharing performance data with us. That gives us insights into over 3.5 billion mobile user devices spread across more than 50 countries. And you can really follow the entire customer lifecycle of an app user from discovery through to download, into usage and engagement, and finally into monetization so that you can really track which trends and which companies are performing well in the space today. And the space is always changing. Very new for us, and just to mention this, we have an exhibit outside with a number of people from Priori here today who you can speak with. We've just brought usage and audience intelligence into our platform. This allows us to track MAU, DAU, ARPDAU, retention statistics, and we know the profile of the users as well. So location, which devices they're working on, which other apps they have, and via a very unique integration that we've done with the Kochava Collective, you can actually target and segment these user bases directly using the Kochava Collective. So would love to talk to you more about that. We work with companies from across 30 countries, 5 different continents, and we're really excited to partner in a very trustworthy and transparent way with over 1,500 app companies. It's about 25,000 apps directly connected into our system. So that's on us. Now we can move into the market, and the market is evolving. Actually, one of the trends that we'll talk about this year is there have been maybe fewer external changes this year than we've seen in recent years, but nevertheless, things continue to really move forward. So we're looking here at non-gaming apps, and the growth continues across the board, both in terms of downloads and revenue. The left side of the presentation here is the Apple data in blue. The other side is the Google data in green. What we see is growth across the board, but Apple continues to monetize much better in terms of revenue generation than Google does. If we look at the other side of the equation, the gaming applications, the growth has actually been flatter in the last years, and this data is year-over-year growth for the first 9 months of this year versus the first 9 months of last year, and we exclude China to make it apples to apples. Google Play has really caught up in terms of monetization on the gaming side. This data looked very different a year ago, and this is one of the major trends that we've seen. Consumers are paying more and becoming more familiar with purchasing via Google in games, and the scale of the overall revenue generated by Google Games now is exceeding that of Apple. Google has always had the download lead. That's been clear given the scale and distribution of Android devices, but they've also really caught up on the revenue side. So if we see those as very high level meta trends, we want to obviously dive in a little bit deeper and understand what has driven those trends. And we thought that we would actually start with what hasn't driven those trends. And we're in an industry where there's a lot of hype, there are a lot of pundits, everyone has an opinion. And as I was building this presentation, I looked back and tried to pull some of the headlines or forecasts that different people had made. So here was one of the forecasts from about a year ago that instant apps or try it now from Google Play was going to kill downloads. And this is a trend that we've been hearing about now for a few years, actually. And as we stand here today, it has not materially impacted the download activity. It's a limited number of apps that are able to use this instant app functionality. Those apps have to be, the features that they make available for instant apps can only be 4 megabytes large. So there are a lot of limitations with this. This is obviously Google's, it's in their interest to try to expose more features outside of the App Store into the mobile web so that they can capitalize and leverage that incredible search presence that they have. But it has not yet translated into significant opportunity or significant change, let's say, to the app stores themselves. Here was another forecast from a year ago. Chatbots will kill the App Store. Everyone was predicting that all of the apps would move into the Messenger apps, like Facebook Messenger, for example, and that people would be, instead of using an individual application to achieve their task, order a pizza through a delivery hero or a pizza app, they would just use the chat functionality in Messenger. And that also hasn't really borne itself out. Facebook had a controversy on this over the course of the summer. Most people still prefer the better and deeper experience of the individual apps as opposed to in the Messenger experience. It hasn't developed as some of the industry players expected. We'll see if that changes, but this is where we stand right now. And finally, and this one is maybe for me a little bit more of comic relief, AR and VR will kill the smartphone. Hasn't happened and probably isn't going to happen anytime soon. So what is responsible for the market growth? Well, we usually look to some of the major changes that happen in the stores. This works better as a GIF, which isn't working, but there's an analogy from the US where it's kind of tumbleweeds moving across a desert road, which indicates that not much has happened. And relative to previous years, we've seen actually very few meaningful innovations at the store level. We'll talk a little bit about those. There have been a few, but the pace of that development is a lot lower. It feels more like iteration as opposed to innovation. And I was searching back over the last 12 months on the Google side, and we literally saw that they had updated their icons. And that was one of the kind of top results that was coming about the innovations in the Google Play Store over the last 12 months. Apple is different. There were a lot of headlines around iOS 11. We obviously had the iPhone X device, which was launched a few months ago. This was being billed as App Store 2.0, that it would really fundamentally alter the way apps are discovered, the way consumers interact with the stores, and that it would be a totally new experience. And the big pitch that they made was that the editorialization of the app stores, making it a more curated experience, making it feel more like a magazine which you could browse and you would want to come back to on a daily basis, splitting apps versus games, creating these individual today pages, that this process was going to bring consumers back more frequently and expose consumers, users, to more fresh, high-quality content that previously would have been buried in the app stores. That was the pitch. And what we did is we wanted to take a look and see whether that has actually materialized in any way and whether that's actually contributed to a new trend in the App Store. So we looked back at some of the data, and what we wanted to do was look at the unique number of apps that achieved a top 100 overall rank position in a given market. And so what we did is, for pre-iOS 11, we took the 30 days prior to the launch of iOS 11, and then we took a post-iOS 11 period, which is actually the last 30 days. We did it as of last Thursday. And we wanted to just kind of compare before and after and see how things changed. We just looked at the US here. It's just the overall category because we needed to keep it short, as the clock tells me here. But over the pre-iOS time period, there were 270 apps that achieved a top 100 position in the top free list. In the top grossing list, it was 160 applications, 430 in total. How many people think that after iOS 11, we had more applications coming into a top 100, more dynamism, more newcomers. Just a quick show of hands, more. Anyone? Okay. And fewer? And just the same? Okay, I'd say that the public is smart. It was fewer. So top free, there were 17% fewer apps that achieved a top 100 overall position in the 30 days kind of post iOS 11 as compared to the 30 days just prior to iOS 11. On the top grossing list, it was a little flatter, but still a decline. Overall, 10 to 12% lower in terms of new applications or dynamism in those top chart positions. So if you say that the overall kind of opportunity set is maybe smaller, not as many companies are getting in, the question is, well, maybe better companies are getting in, or maybe new companies are getting in. So we wanted to take a look at that. And what we analyzed was the percentage of those apps that achieved a top 100 overall position in the post-iOS timeframe. How many of them were new to the lists? That's in the green. And how many of them were just carryovers? So they had previously been in the sample set as well, and that's in the yellow. And actually on the top free lists, it was approximately 45% of the applications that achieved this top 100 overall position were new during this time period. Not new apps, not necessarily newly launched apps, but new to this ranking position in the charts. So a fair amount of turnover, actually. On the grossing side, it was a much smaller number. 27 apps, about 17.5% turnover, which doesn't leave a lot of opportunity for newcomers into these positions, and probably doesn't validate, I would say, the pitch that more applications are going to find success in terms of revenue generation, given the new format of iOS 11 in the app stores. So if we focus on the top free, and we saw that it was 95 apps or something like that that actually achieved these positions, we wanted to know what was the profile of these applications. Are these actually new apps, or are they older, more established apps that are just sort of re-entering a top position? And the profile of the new entrants into the top 100 free overall, you'll see a lot of familiar faces here. So we looked only at the applications that made it into the top 100 and stayed for 7 days or more. So we wanted to exclude, burst campaign or single featuring analysis. We wanted to look at the longer standing and more successful players. And in that list, we see names like Super Mario Run, we see an Alibaba app, we see a Google app, we see apps from Zynga and Scopely and Bandai Namco. I mean, these are established brands that are all of a sudden finding repeat success in these top lists. And on the right, and I think it's probably a little hard to see here, but we tried to break up everyone who entered into indie or established. It was a bit of a subjective classification for us, but we more or less captured it, I think. And the takeaway is that over 75% of the new entrants were established companies, either in gaming or in non-gaming. So yes, there were 95 new apps that made it into a top 100 position, but 75% of them are familiar names for us. Here's an example for Super Mario Run. So the red line is the 19th of September. This is exactly when the iOS 11 was launched. Super Mario Run had been tracking in a 100, 150 rank position. And following iOS 11, they boosted up into a top 25 rank. And they've stayed up at that level more or less since that point. A few other notable new entrants. Chase Mobile, which is a large finance app. It's a big consumer bank in the United States. And McDonald's, whose twin arches I think everyone recognizes. These are not new apps. Why did they get into the new top overall 100 position? Well, they updated their apps. And if you read the release notes of each of those apps, Chase enabled Face ID. Face ID is a new functionality, a new feature with the iPhone X face recognition. As a result of that, they boosted into the top. McDonald's enabled Apple Pay in an update that they did. As a result, they were classified as kind of a new update, and they again moved up into the top. And the takeaway here really, and it shouldn't be a surprise, but sometimes I think we lose sight of this a little bit, app stores promote apps that make them money. And they can make them money on the services side, or they can make them money on the devices side or with a feature that comes from a new operating system. And these are big businesses now. Excuse me for one sec. Apple's service revenue is now $7.3 billion a quarter. This is where App Store revenue comes in. And on the OS and device side, you have features like Apple Pay, like Face ID, like ARKit, like the watch integration, which help them build stickiness in the overall Apple ecosystem. And a lot of the marketing that we hear about around these big launches also has these goals in mind. It's not necessarily for the benefit of the developer or the consumer. And excuse me, I think that's very important to keep in mind. So, which trends did matter? Excuse me. There are a lot of dots on here. You don't necessarily need to recognize them or read into them because I'll summarize them. But we're looking back again at the non-gaming applications. And on the left, the y-axis, we're looking at how much they grew year over year. And we're looking at non-gaming categories. And on the x-axis, we look at how big those categories are in terms of overall revenue generated. And in the non-gaming group, we have now 3 categories which have earned more than $500 million US in revenue so far this year. And in the green box, we see 8 categories that are growing 50% or more year over year. So non-gaming apps, in terms of revenue generation, and we go back to the early slides where we saw the monetization levels on Apple, have really picked up. And the trend that has contributed to this, by and large, is subscriptions. And each of the top 10 fastest growing applications on Apple during this time period that we looked at monetizes using subscriptions in some form or another. And what's really interesting about this is it's not just, everyone knows about Netflix, everyone knows about Pandora and the fact that they utilize subscriptions, but you see lifestyle applications up here, you see utility applications up here, you see photo and video applications up here. Subscriptions as a concept and as a trend is really proliferating throughout the rest of the categories in the stores. It's a consumer trend, it's a consumer preference, it's a consumer familiarity, and that's driving growth. On the gaming side, we have a little bit of a different story. So the growth is patchy. You've had, we'll look at this in the past, we'll look at this in more detail in a second, but gaming categories have been the juggernauts, the powerhouses of monetization on the app stores, and that has been really driving growth going forward. What we see now, we didn't have a single category that's grown more than 50% year over year. That's compared to the 8 that we had on the non-gaming side. We had 6 categories who were growing at some level with more than 500 million in revenue, but we actually had 7 categories where there was a decline in revenue. So this, if you compare it to the non-gaming apps, really does paint a different picture. And the other thing is not much has changed at the top. So if we look at the top overall earners in the App Store via in-app purchase revenue, via paid downloads, the top 10 list from 2016 looks incredibly similar to the top 10 list for year-to-date 2016. The only two new entrants, it's tough to see it on the screen, I think, but number 9 and 10 were the only newcomers into this top 10 list. I think actually this data is year to date for 2017 through the end of September. I think we will, by the end of the year, have a few other entrants when we look at the full calendar year, but still, there's a lot of stickiness at the top. So if we conclude on this, what does this actually mean for all of you and operating and seeing all this hype and seeing these trends and seeing these forecasts? You should focus on consumer-driven trends, and you should be weary of store marketing trends. Consumer-driven trends like the fact that consumers are becoming more comfortable with subscriptions, not just for entertainment, but for other categories. Consumer-driven trends like the fact that yoga apps, for example, have grown incredibly quickly as a category, as a genre of applications on the non-gaming side. What could you learn from that? On the gaming side, word games is one of the fastest growing categories. What is it about word games that consumers are latching onto, and how can you emulate that in your own genres? Understand who's making it into these newcomer lists. We've seen it's not easy to get in there as a new app. What is it that they're doing that has achieved success for them, and how can you look to them as an example? Those are the types of points that we think really differentiate and distinguish winners in the app stores versus everyone else who's really just fighting to stay above water and find their own distribution and optimization opportunities. And obviously for us, we recommend that you validate everything with data. The data is out there, it's accessible, and we think if you use it strategically, it can make the difference in your business. We have an exhibit outside. We have 6 beautiful Priori people here today. We'd love to talk to you. Thank you very much, and I hope everyone has a great rest of the day. Thank you.